A tremendous pleasure to be speaking with you today.
Now back to the Dan Gemis Real Estate Show on AM800.
Okay, welcome back. 12:37 here on AM800. I am Dan Gemis, and it's time for our mortgage segment here with our good friend Ron Bondy from the Super Mortgage team. Hey, Ron, how are you?
Oh, I'm fantastic. How about yourself, Dan?
Well, I'm very good, thank you. And today we've got a great topic. It's all about purchase plus improvements.
Exactly. Purchase plus improvements. What does it mean? How does it work?
Well, it's a magic wand. You just press, you just wave it around, and next thing you know, you got a bunch of money, right?
Well, exactly. Poof. Presto. So, so let's say, one of your fantastic agents shows a client a house and the layout is perfect. I love the layout. But, I really don't like these floors and I really don't like the kitchen. If only I could change that. Well, we have an option for that. We call it purchase plus improvement. So through the insurer, you can put as little as 5% down, and you can roll in your improvement into the mortgage. Now, how that works is you get a contractor to give you a quote. You supply that quote upon approval, and you can get up to either 20% of the purchase price or $40,000 as a maximum. Obviously, has to match the quote, and then when your mortgage funds, you get funded your purchase price, and what is held back is that improvement money. Now, you get the improvements done. You replace that kitchen, replace those floors, you pay the invoice, and then you go back to the lender and you say, okay, I've done the work, and then they give you the rest of the money back, the $40,000 or 20% or whatever you have put into the house.
So do you have to show, Ron, that you've already paid it, or can you work something out with the contractor that you pay them after the work is done and you get the money from the bank?
Most of the times, most lenders like to see a paid invoice. So that's kind of the sticky point for a lot of people.
Okay.
Where are they going to find this money to pay in advance, right? So, sometimes it goes on credit cards or lines of credit, but for the most part, most lenders want to see a paid invoice. Some lenders will do pictures.
Okay. And some will do an inspection.
And some will do an appraisal. Exactly. Yep.
Now, do you think that's because of concerns with fraud or someone taking the money and not doing the work, etc.?
Yeah, for sure. Because, let's say we all get busy, right? Especially when we're buying a new house and we're moving in.
Sure.
And, maybe we put off our improvements, right? So the bank wants to make sure that those are done before they give you the money, or else they're only going to give you the lesser of the appraised value or the purchase price of the home.
Interesting. Now, years ago, Ron, I recall, the max being 10%. So has it increased, or is it just some lenders are playing a little bit more with this program?
So there's when you're talking about insurers with this program, so there's two insurers, and you are correct. One does 10% maximum, but the other two insurers do 20% up to a maximum of 40%.
That's great.
And then also, so let's say you're not using an insurer, so then some lenders will actually let you go a little higher than that as well if you're putting more money down and you like 20% or more, and you don't have to go through an insurer.
Now, obviously, in a case like this, with a purchase plus improvements, the bank wants to make sure that the home's value will hold up, right? So they won't let you overpay for a property and then add $40,000 of work to it with it not appraising out, correct?
No, so the property still has to appraise out as is. And then if you're putting $40,000 worth of improvements in, then that $40,000 gets added on top of your appraisal.
Okay. Wow, great. So listen, I was going to say, anything else on the purchase plus improvements before I jump to a different topic with you?
No, really, that's about it. It's pretty cut and dry.
Fantastic. Now, you mentioned insurers, so there's a few options for a client. I guess would it depend on, I guess, like any mortgage approval, right? To depend on basically your ratios and et cetera, et cetera. So is there a reason why you would choose one insurer over another for a client?
Typically, it's just programs, which program fits the client better. So, like, if a client wanted, like, the cost of the insurers are all the same, so it's not a cost perspective. But, you know, like, let's say, you know, you only needed 10%. Well, we might bring you to that insurer that does the 10% instead of needing to go to the other insurer that has 20%. So they all have similar programs, but they do vary a little bit, and that might be the reason why we choose one insurer over the other.
Understood. Okay, so on a different topic now, obviously interest rates is what everyone is talking about. I've heard grumblings, Ron, over the last little bit since the banking collapse in the States that maybe it's just I'm just reading things that aren't true, I guess it's possible, but they're talking about possibly reducing rates. Is that something that you've seen as well, or am I just dreaming?
So, and no, you're not dreaming. So the fixed rates. Exactly. So the fixed rates have dropped because of what happened in the States recently. Like, obviously the bond market dropped because of what happened in the States, which affects the fixed rates. So the fixed rates has dropped. Is it here to stay? In my opinion, no. So, but I guess if you wanted to look at a good news aspect of this, with the bank collapsing, the spread between the States and the Canadian interest rates are going to be tighter. So with them, before the banks collapsed, they were talking about possibly if the gap got too big, that Canada would increase again. But so good news for us, good news story is they're most likely not going to raise as much as they thought, which means that we're probably going to hold steady ourselves with the interest rate, not see a hike.
We'll take whatever good news we can get these days.
Exactly.
Oh my goodness. So, okay. And remind everybody, where are you typically seeing rates? I know they hover depending on lender, et cetera, but what's an average rate that you're seeing right now?
So average, you should see a rate, an insured rate sub 5, and a conventional rate just over.
Okay. So you're hovering.
So they are, again, historical average is about 5.5, so we're still hovering just underneath that. So it's not horrible.
It's pretty good shape. Hey, listen, Ron, great information as always. Thank you so much for joining us every couple of weeks. It means a lot to me and to our listeners.
Well, thanks for having me. I'm glad to be part of it.
You got it. It's Ron Bondy, mortgage agent with the Super Mortgage Team. Ron, how do folks reach out to you if they have any questions?
You can reach me by cell phone, 519-791-2961. Email ronbondy@supermortgageteam.ca, or you can book me on the web at ronald.bondy.ca, or they can contact your office, Dan, and I'm sure one of your lovely agents will put me in touch with them.
Yep, you got it. Thank you, sir. Appreciate it. Have a great rest of the weekend, and we'll see you in the office tomorrow.
You too. Talk to you. Bye.
That's Ron Bondy again with the Super Mortgage Team. Great information there. So we are going to take a break here. We're going to give away the gift card for the Richmond Popcorn Company, $50 for the Richmond Popcorn Co. in Amherstburg on Richmond Street, right in downtown there. If you haven't already entered, you still have a chance. Got a couple more minutes. Make sure you text 10800 with the keyword movie, MOVIE, with your first and last name, and you're entered to win. We'll give that away right after the break, and we're going to come back and chat with our featured business of the week this week. It's the Parlor Ice Cream Company in LaSalle, and we'll talk with Crystal Meloche, owner of the Parlor, about her business and learn all. Hey, listen, it's got ice cream involved. I love ice cream, so can't go wrong there. Okay, so lots more to come right here on the Dan Gemis Real Estate Show.